from Malik and myself to lead you around what is undoubtedly a continually eventful market. Just when you think it can't get any more exciting, all it takes is for Woody Boy to roll out of bed in the morning and pop a social post up, and the whole world goes to complete la-la. Anyway, we're here to sort of try and unpick it, trying to sort of make sense of it all, and so you are armed appropriately to deal with the slings and arrows. Welcome to everybody. How are you doing, Cam?
I'm good. I'm really good, actually. Yeah, we've been a few weeks away, lots of travel. Was in Singapore for the big crypto conference, and yeah, now back and just being grateful we all survived the weekend.
Absolutely.
Many people didn't. Many people didn't.
Say again, sorry?
Many people didn't.
No, indeed. They've made things worse in the days subsequently, I think.
Yeah.
Right. Let's get into it, of course. And of course, feel free to comment, question, and anything else you want to put in there is always very welcome. I'll try not get too politically orientated in terms of what I think about stuff, because those are obviously market issues and ethical issues that are all intertwined. We've got to say that really good news, obviously yesterday, in terms of at least some movement on hostage release, prisoner release, and the prospect, however untrustworthy some of the people involved in those decisions are, to see some progress on that from a human point of view is fantastic. So just wanted to acknowledge that. And much as though my praise for the current administration is mixed, you have to say that a good thing happened, and that is never a bad thing. So there's possibly a little bit of a feel-good thing yesterday, but of course we had a Trump-induced blip on Friday. We'll talk a little bit more about that as we go. There looked as though there was going to be the usual taco type recovery, but even despite that, we had a blip of it. There was a 4.5% swing on the NASDAQ intraday. And of course, this is not helped by the fact that there's no data, because we'll talk briefly about shutdowns and stuff. We'll talk a bit about gold, we'll talk about Bitcoin still being a bit sticky, and we'll talk about US earnings and all of that sort of stuff. Cam, do you want to... so this is the NASDAQ chart. Cam, do you want to give me, and this is obviously Friday's interesting candle, do you want to give me your sort of take on what sort of happened, what unwound in the excitement of it all?
Yeah, I mean, it was an interesting one. I think I was saying to the guys earlier, it was just really interesting of the timing of the announcement as well. Obviously, it caught a lot of people off guard, including myself. That, you know, obviously, if you're in Asia, it came out probably about 5 in the morning for me. So, you know, either people were tucked up in bed or coming home from the nightclub or whatever at that stage of the evening. So, you know, so the Asian markets were closed. Of course, Australia was closed. Europe was closed. So, and it came in pretty much, I think it was just after the US had closed. So we got that rollover with the futures. But yeah, it's interesting to see that, you know, only I think, Mike, that's it. That red candle that's there, that was the cutoff of the market. That was it. You know, there was basically, is that an hour chart or it's a, sorry, it's a,
that's a daily chart.
That's the daily chart. Okay,
Yeah.
so basically, yeah. Okay, so that we don't see, but I mean, it was basically just came in the last hour. So the NASDAQ, you know, it didn't. It was a move off, but it wasn't colossal. I think what was colossal was what happened in the crypto markets, particularly once you know there's sort of no institutional involvement after that stage. So we can maybe roll into that a little bit more a little bit later on. But yeah, it was an interesting one, and I woke up on Saturday sort of looking at it, thinking, well, okay, well, possibly how much further this is going to go, or not, or is it going to escalate? And you know, fairly quickly, we had Trump coming out saying it was all going to be fine, and China de-escalating as well, and even some people saying there was something lost in translation of, you know, the rare earths. So, you know, it's always on the table, and there will be access for rare earths. But I don't know. It was a strange one for me, particularly with it being outside kind of normal hours and into a weekend. Yeah.
Our chart put up there. So it was the last sort of 2 or 3 hours that really sort of accelerated. Market open. Obviously those last bar is out of hours, but so we saw that go on, and then of course we saw the immediate gap up in Monday's trading, which again you can see on that sort of hourly chart if we're looking at the NASDAQ. Obviously Bitcoin was trading over the weekend and it got pretty well. Let's just put on a 4-hour chart just to see a bit more detail. So this is sort of Bitcoin. So it bimbled around there after that. And also took it back down to that sort of 107-ish level and then pop back up. We'll talk a bit.
Well, there's the thing, Mike, right? Depending on what platform you're on, it went to 107 there, went to 106 on Coinbase, it went to 101 on some of the exchanges. So that is where it was a little bit kind of strange that yeah, we just don't have any institutional involvement. It's down to the crypto exchanges, which at this stage are not regulated. So yeah, that was the thing. And also, I mean, I was going to show it, but maybe because you've got the chart there, go onto a 5-minute chart and look how long the action was down there. Not very. Yeah, I'll maybe I'll pull up another chart. I'll show you. I'll show you on. Yeah. Very. We've really jumped into this. We've jumped into it, guys. But I didn't expect to get this up straight away. But let's get into it, because I think it's relevant for the guys as well, just to kind of know the difference between trading.
Do you want it on a 15?
I'll tell you what, mate. Let me bring up Bybit chart, and I'll just show you kind of what happened.
Well,
very briefly.
Flip this across.
And then
while I'm flicking the presentation control across to you, how much of this do you think might have been pre-planned? Just with a little bit of a.
Well, this is the thing. We get our tinfoil hats on, but it does seem to be orchestrated. One new wallet was opened 20 minutes before the announcement and closed 50 minutes after the announcement, and they made $120 million. So, kind of like, there's a lot of stuff blowing around. I'm going, was that Baron Trump? What was that? But yeah, okay. Let's not get ahead of ourselves. Yeah, sorry, guys. So yeah, I mean, was it orchestrated? Yeah, I mean, you just never know.
Perhaps maybe people knew. rather than it being people use
Well,
something
well,
like to
this
go down rather than not the
this
other, of course, not quite so extreme.
I think this is the thing, and I kind of wanted to explore this a little bit more, and chat it over with you as well, of just the difference between sort of maybe traditional markets and crypto markets. So I'm just trying to get this sorted here. Okay, so now we can go. Okay, so check this out. So screen 2 here. So this is us coming into Friday. Now, what we're looking at, guys, is we're looking at a 5-minute chart.
Hang on a second.
And can you
We're not
see that?
seeing here. We're not seeing.
Oh, okay. Wait. Show the screen. Yep, there we go. Okay, so yeah, what we're looking at here is a 5-minute chart. So you've got Bitcoin trading up at 116. That's after hours. We're talking. This is UK time, so we're talking 9 o'clock. So the US is closed. The cash markets have closed 45 minutes ago, right? So then we've got the futures. So we've got the CME still open. Yeah. So there's futures. There's futures trading up until here. Now there's no futures trading. So CME is closed, and
Yep.
we get it from here to here. We drop 13,000 points. So we have within 10 minutes or 5 minutes, we had a 10,000 drop. So within 5 minutes, we got a 10,000 drop. Within 1, 2, 3 candles, okay, call it 4, 5. Within 5 candles, we're back. So yeah, was it orchestrated? Maybe. Did people know the announcement was going to come out? I definitely think so. But what I do think could also possibly happen here in this scenario is once you've lost, the CME futures, now we're just on exchanges. So is that an opportunity for the exchanges to pile on and drive it lower? And that was potentially what happened here. And there's being a sort of a disparity of your charts. If you've got 100, 106, 107, and over here we've got like 100, 102.
And the time is different as well.
Is the timing different? So yeah, so I definitely think that there was something going on, and maybe we could look at that's Bybit's chart. Maybe we could look at another platform just for.
I mean, there was still a similar pattern, but we got the gap down. So if we
but a 4,000
down, and then when it opened, when if you like the market making platforms reopen again, then there's a gap down and a bounce. So in terms of that specific time period,
I'm just looking at Binance now.
I'll just quickly flick it back in a second.
Oh, okay, great.
Do you see that?
Yes.
See my screen. So that's the end of essentially the end of the CME. There's the gap down, which of course yours filled, and there's that straight back up again. So this disappeared, leaving people. So it's the same pattern. It's just that there's a gap there at that specific time of day. Plonk it back in your direction again.
Yes, mate. Let me just see. Sorry, guys. We're looking at charts on the fly. But yeah, here's Binance. Yeah, Binance only got down. Again, it's a 24-hour chart, so only got down to 107, whereas Bybit got down to 102. So you think of the difference in pricing, and the difference in the amount of people that could get could get liquidated. So it was the largest liquidation in history. 19 billion got written off the market. So huge liquidation. So, you know, I think there's two sides to it. It's one, was it all just orchestrated all the way? One, was it an announcement that Trump had coming out and there was people that knew about things? Or was it just the fact that, you know, the exchanges just piled on to this, that they can now push the price to liquidate people, which is part of the game, really, to take those funds out of the market now and then ultimately push the market higher. So yeah, I mean, an interesting one, and it will be interesting to see how that sort of played out for people with stops as well. You know, if you had stops in the market, did you get taken out at those prices or not?
Sure.
Did you get taken out at your stop price, or did you get taken out, you know, at a lot lower price?
It was the whole experience was I was talking to the EA guys on Monday, sort of looking at what happened to EAs that were open on Friday. It's a really good test of how robust an EA book is, and how balanced it is. Because obviously you want to be able to reduce risk at this point when it starts to fail, and then take advantage of this. And we actually ended up in positive territory on Friday. Though we're primarily risk on prior to that big drop on the NDX and the market as a whole, because of things like maximum give back and handbrakes and stuff like that that we put in, all of a sudden we've got no positions open, all of which have lost not so much. And then, of course, the big drop continued. So it was a really good test of how balanced an EA book is as well, as a general point. And that's good. That obviously translates to a discretionary portfolio as well, in terms of, have you got the right things in place? Particularly if you're short term, of course. If you're longer term, it matters less. Have you got the right things in place to manage to social posts at 3 a.m. in the morning or whatever time it was for wherever you are? So I mean, that was,
it's a good point, Mike, actually, isn't it? I mean, that you know, is your weekend protection strategy. If you are carrying over the weekend, what's your protection? Which for myself normally was short-term trades. I normally wouldn't carry them over the weekend unless they're risk-free. A lot of my crypto is all on spot, so there's no stops like a stock, if you like.
Yeah.
Because there's no leverage. But yeah, I think that's a one, as you say, that's a really good test, but also it does bring in the fact of, you know, guys always have like I always had a weekend strategy of if you're going to carry anything over the weekend. Yeah, even to the extent of guaranteed stops as well.
Yeah.
That, you know, that you can get with certain brokers as well. Pay a little bit more, but just get a guaranteed stop.
Sure, for sure. And look, even if, so, I mean, there might be some people on here that were quite hurt over the weekend, but it's just feedback. It doesn't mean that you're a dreadful trader stock investor. What it means is there's perhaps a little gap in your game, and the weekend, to keep you strong going forward, the weekend was possibly a reminder of or a little nudge that there's a gap in your system that perhaps you need to look at. So it's really important that you see things in context of terms of, this is an event that happened, and your job as a trader stock investor is to make sure that next time a similar event happens, then you're in a good place to be able to ride it, however that may be, or for your own personal trading stock investment objectives and financial situation. So treat it as a nudge if you got a little bit of a bruising. Just put something in place if it isn't. I guess is probably a good message.
I think it's a great message, Mike, because you know, it's inevitable, isn't it? You know, people, we can get complacent with just the way that the market's going, or you're on a really good run, and you can miss stuff. So yeah, I think it is. It's a good nudge, and sadly, you know, you either get it this time or the next time or the following time, because it's gonna happen again. You know, particularly with our friend, our Mr. T friend, kicking around.
Indeed. Absolutely. Good stuff. Yeah, as you said, we completely went off, well, not sort of off script, but we sort of went a little bit sideways. There's obviously a few other things kicking around.
Right.
But that's what we do. We talk about things as they pop up. And according to your question, so let's talk government shutdowns for a moment. Obviously, this has happened since we last met.
Yes.
So it depends on which algorithm, which YouTube algorithm that you're part of, as to the message you're getting, and which US news channels you watch, I guess. But the bottom line is that for those of you less familiar, that the US government has shut down, which means it's not paying people that it should do, and so there are all sorts of implications of that. And the bottom line is that despite the fact that the Republicans have got control of the administration, the House and the Senate, there isn't quite enough of them to push things through without any contest. And they're a little shy. Now, the major debating point is the Affordable Care Act. Affordable Care Act used to be called Obamacare. There's nobody really thinks that this is an adequate system, but it is a system. And it does mean that there are people who that there is a subsidy available that means that people are paying less insurance than if it wasn't there. Myths that are kicking around: the Republicans would like you to believe it's the Democrats' fault, and they're doing it because of these illegal aliens, and it's the radical left, blah blah blah. But the reality is that anybody who's not a legal immigrant can't access the Affordable Care Act anyway, so that's a nonsense. Just to dispel that myth. If it removes, then the reality is, and notices are already going out from the various insurance companies, that people's health insurance will probably double. Now, is that a drama? Absolutely. On a human point of view, it's a drama. Absolutely on a can people afford to live, on potential bankruptcies, absolutely a drama. Do the Republicans care? Well, who knows? There's more than just AT involved in this, of course. There's Russell Voigt, is it, in the background, who's Mr. Project 2025. We're ticking off his little things as he goes through. But the strange thing is that this "we don't mind" thing, sorry, what the Democrats have done is saying, well, please don't remove these credits for right now. Let us sort out the ACA, recognizing that it does need some work. Don't take those away right now. And the reality is they've put an Ministry of Education to fund it for another 6 months or so. Because of course they're using this opportunity to cut as well. So the interesting thing about it all is that there are various surveys that sort of tend to indicate that, unlike a lot of what's been happening, this isn't a target blue so-called states. This is going to affect Republican-controlled states as, if not more so, than Democrats. So one wonders the political. Is it just that we create some pain and ultimately something will be better to replace it? Or is it simply just this is an opportunity to not have any data out? If you not have the extra people or the extra person brought into or ticked off on the government signed in that won a local election recently that would push the Epstein file release over the threshold that it was. They need one more vote, and that's not going to happen until it reopens. whatever it is, there's lots of things going on in the background that are creating this, or maybe not creating this, and it's difficult to do so. But in terms of the markets, the service disruption is obviously significant. Obviously, the absence of data is really quite critical. And then there's a Republican opportunity for job slashing, of course. But in terms of the markets have survived it okay, because they don't seem to think that it's going to last any length of time. But of course, with an absence of data, ultimately that's going to start to impact on market confidence. And the reality is, I don't think I've felt this way for quite some time, that there's such a disparity between Wall Street and Main Street in terms of what was coming out prior to shutdown, in that you've got obviously markets which are really quite buoyant for reasons that are fairly well justified, particularly in the tech sector, and you've got a mainstream which is showing really quite poor economic growth, and potentially to get worse. So the absence of data, the market's been robust now, and I mean, even with this latest blip, the markets have still only pulled back a smidge, if in the technical term. But you've got to think that the absence of data is ultimately going to sort of start to upset. Markets hate uncertainty generally, and without that certainty of at least where the economy is, you've got to think that maybe that's going to impact. Have you got any thoughts on this, Cam? In terms of, obviously, we're not getting any jobs data, any CPI data, etc., etc.
Yeah, I mean, I did a little bit of research last week, and typically most government shutdowns are resolved within 3 weeks. So we're in week 3, and they tend to be bullish events. On the back of, you know, what other bullish things are going on with the Fed, and as you say, you know, the backbone of the tech market. I think my concerns really roll in if we start going past this week. I agree. I think that then we do start to look at that sort of uncertainty in the market with the lack of with the lack of data. And at the moment, I think, well, okay, we're rolling with it fine. But I think if it extends, then it definitely worries me.
Yeah, it's good. I mean, and because we only know probably a fraction of what's really going on behind the scenes, it's difficult to know how it's going to play out, even those. So it's really wait and see, isn't it? And just be vigilant in terms of looking how markets are responding.
Exactly, and I think that's the thing is that, you know, I think I'm a big proponent of you've got to be on top of the macro, but equally we've got to be on top of the price and how that news is being translated. And at the moment, it's being translated as, okay, well, we had a little blip on some news. We've gone back to, the sort of, you know, recent, when we look at the markets, kind of back to recent lows, and we're holding. So it is a challenging one, because we do always want to interpret it. And I remember being on a panel, and they were really getting into it, and I couldn't help but feel that really at the end of the day, guys, we just got to see what's happening with price. When we look at it from a market perspective, and that's what we're here to do.
Yeah, indeed. I mean, obviously, it's playing into some things. I mean, I think it's contributory to gold, and what's happening with that. We'll talk about that in a moment. Just that uncertainty, let's buy some gold. I wonder also what this is doing to international confidence in the US as well. But again, that's really difficult to measure. The USD actually held up quite well last week. But gold, of course, is flying. So that's those are the only two assets that I'm sort of looking at and thinking, well, is there an impact on either of those for right now? But yeah, I think that's it. Don't trade what you think. Mitigate risk for what you think might happen, but actually trade what you see.
Yeah, trade what you see. I think that's it. We could, we can have our views, but at the end of the day, look at the chart, and look at the chart, but also be aware of, TA is not going to help you if Trump puts something out on Twitter or Truth Social or whatever. If he's going to put a bomb out there, TA is not going to help you. But then, then we see, okay, well, how's the market responding to that news, and we can go from there and use, a myriad of things to evaluate that. But yeah, I think for the time being, it looks for yourself, Mike. I think gold. I don't trade gold, but I think there's a lot of tailwinds for gold at the moment, other than the shutdown.
Yes,
it just seems to be like
it's just another reason.
Yeah, exactly. It seems to be every foreign government is buying gold at the moment.
Yes, indeed, and then of course, just in case we didn't have enough to deal with, it's US earnings season, round 3 for the year. JP Morgan kicks things off before the bell tonight. I did a little bit of digging around about what expectations might be. It's more difficult to judge because essentially the tariff impact, corporate response to that, because obviously if people aren't hiring, then the tariff impact may be lessened as people reposition how they're financing and how they're passing costs onto consumers. And policy changes don't seem to go away; they just change regularly. For reference, the expected growth rate for the S&P 500 is 7.3%, which is not as much as it's been in the last 2 quarters, I think 3 quarters, but still obviously fairly healthy. Now the forward 12-month PE ratio for the S&P 500 is 22. Although this isn't a remarkable piece of data, it is interesting nevertheless. Some people would look at it in terms of how, or relatively how, whether markets may be overvalued or not. Just to put it in context, the 5-year moving average is around about 19, the 10-year moving average is around about 18. But again, there appears to be reasonable, just if tech are driving it, then there appears to be reasonable justification for where it is for right now. So it's really, it's going to be an earnings season, I think, where possibly more so than most times. I mean, I think forward guidance is going to be as important as review stuff. I think that obviously companies don't meet expectations are going to get belted, possibly a little more so than is normal because of where markets are sitting for right now. But it's not a bad chunk of expectations there. Is what I'm thinking. It'll be interesting to see. Does that mean there's potentially more surprises to the downside? What do you get any feel from your point of view as to how are we expecting a good season, and what the range, what the sort of narrative may be around it?
Yeah, I think we are. I think we should see some positive action in the market. I mean, things have been good. I think earnings will be good. Yeah, I'm pretty positive on it at the moment. But let's just see what data's coming out, and that's the challenge. It's just let's see what data's coming out, and let's see what macro is happening around it. As you say, if we get positive data and we've got some real macro headwinds, then yeah, it's going to be mixed, isn't it?
It is. It's a
challenging one. Yeah, it's a challenging one. As I keep kind of saying, for me, even if I say to the guys, look, here's where I'm looking to buy, here's where I'm looking to sell and take profits. But just know when it gets to that level, I might do something completely different. That there's nothing set in the ground that once if we get to there and the world's falling apart, well, we might not buy, but if we get to our profit targets, I might hold. So
yeah, for sure.
so it's hard, isn't it, to predict
It is.
how it's all going to play out. But at the moment, I mean, pretty much my feeling is that overall I'm bullish. As you say, I'm bullish until I'm not.
Yeah. It's the data that worries me more than, because earnings are really sort of review mirror stuff as a general rule anyway. The data is to some degree, but it's the data that concerns me more than earnings. I think earnings will come in okay.
Yeah.
And then of course there's this beast. So yeah, I remember when I was thinking, 4,000 in sometime this quarter, maybe, possibly. And of course now we're at extraordinary values, and that isn't obviously an up-to-date chart. I think that's where it was when we last met, just for context. 3,000.
Is that right? Wow. Where's gold today?
Of course, where we are now.
4,137.
4,150. It was about $8 short of 4,200 today. A little bit of a pullback over the last. It's not surprising that we had a little bit of a pullback, to be honest. Nice retrace, nice profit taking retracement there. And the buyers are kind of like, again, watch this level here. And as you say, central banks are buying gold in abundance. And a little bit of flight to safety, a little bit of inflation concern because it's proven to be sticky. Government shutdown, there's another reason why it might, even though that might not be driving it up, it might be helping keeping it up. There's very little, apart from price and people getting a bit nosebleedy, which I guess is another technical term we can add to the dictionary. There's very little I'm seeing that might result in a fairly major push down on this. That was.
Yeah, I don't think so. I mean, I think it's interesting because I think the interesting thing for us, Mike, is that right. Normally, we're seeing gold rally and markets come off. That's tradition, right? That's normally what happens. But what we've been seeing is we've been seeing markets at all-time highs and gold rally. So and the big thing out there at the moment is the debasement trade is maybe these central banks realizing that fiat is actually really going to nothing, and they're going for hard assets, or BRICS. Are they looking at a new currency that's perhaps gold backed, storing more gold? It is an interesting one. I think we're just in a slightly different era of the look. Yes, the stock market's going up, but the stock market will go up regardless of kind of what's happening because of debasement, because it's dollar. Yes. It's measured against the dollar, which I mean, I'm quoting, but somebody correct me, but there's at least 40% new dollar supply, right, since in the last 5 years.
Yeah,
that it could be more. But I think that's kind of where we're at. So
because there's other reasons apart. I mean, look at what the USD has been doing. This is what the USD has been doing really since the beginning of September, mid-September, we hit these sort of lows, 3-year lows it was testing at that stage. But look at that. So there's money going into USD and into which and markets are going up. So it is an interesting triad of price action. So yeah, as I said, I can't see for Bitcoin, but I can't see anything changing. And really, we're back around 112 again. We talked about this when we last met as well. Since we last did that, we've been down here, up here, and down here again. And where are we sitting now? In today's trading back at around 112.
Yeah, and this is the interesting thing is that, you know, when we look at the actual institutional inflows, if you like, via the ETFs, it's absolutely massive. It's colossal inflows, but we're not seeing. Okay, we made a new all-time high. We've clipped that. That was not last Sunday, a week. Oh no, it was last Monday, right? Not yesterday.
Yeah.
The previous Monday, because I have a little, it's not a joke, but I have a little joke with my guys of, you know, or I get the question of, Cameron, look, there's a new Bitcoin all-time high, are you popping some champagne? And the last all-time high came in on the previous weekend, and some champagne was popped, and it came around again 2 days later. And I thought, look, if it happens twice in a week, let's not do any more, and you know, a bit of working week to get through and stuff like that.
Yeah.
But yeah, so we clipped these all-time highs, and then that's the thing. I just think that, you know, with the difference at the moment of just having, you know, Bitcoin being institutionalized or regulated, if you like, through the ETFs, and for sure the institutes are driving the markets, but the fact that you've still got you know, players or exchanges out there that can still manipulate the market, and that still be legal, then I think that is creating perhaps a little bit of stickiness at the moment in the market, potentially. I mean, that's just, I guess that's just one theory, but we aren't seeing that. You know, Bitcoin has traditionally been lagging gold and moving quite in a similar nature, depending on who you listen to, either 30 days or 90 days lagging gold, and we just haven't seen that since early summer. So
Yeah, sure.
Yeah, but plus we do have, you know, just continual massive buying from the ETFs, and now even the public companies, the treasuries of public companies now have surpassed the ETF holdings, which is unbelievable as well. So you've got more and more companies using their cash to buy Bitcoin. So yeah, it's a little sticky. Yeah, let's see. I can't help but think that this was just a big shakeout for the market to move higher. Do we get another shakeout? Possible. So maybe a little tip for the guys: if we drop below 100, I'm a buyer for sure.
And you can't deny, even at a very, very basic technical level, on the daily chart, you have got higher highs. Every peak is a higher high. Look at the last.
You do. You do. You do.
And the last three troughs are higher lows. So even at a very, very basic technical level, it doesn't say we're getting shot into oblivion, and maybe there's an opportunity every time it sort of ducks down to this level, which it has been really since late June.
Yeah, I think overall you're totally right, Mike. I think certainly on your chart, my chart, albeit an exchange chart, because we don't have a chart from the CME because they were closed, is that, yeah, that is a lower low. I'm just looking at it now. So that was a lower low.
Yeah.
But you know, certainly you as a technician, Mike, and me, I certainly followed the price action. What we can say is that, you know, we've had no closes. Is that an MA200 in red there?
Yeah.
Yeah, we've had no closes below the MA200. And I would think, your yearly VWAP would be around about those levels as well. So yeah, the TA looks okay, and depending on what chart you look at, one thing, whether you have a higher low or you have a spike, which was just a clear liquidation, yeah, it's looking okay. I think the key thing was just the sheer volume of the drop,
Sure.
and how quick it was. Again, in comparison with, okay, we didn't get to see the full what would happen if we were in a normal market and the NASDAQ played out. But what was the NASDAQ drop? Was it? I think it was only like 2%, wasn't it?
Well, it actually happened before. Just to get an exact timeline
Oh,
on this,
sorry.
but if we look at,
There was a 4, yeah, from the highs to.
so if we look at, yeah, so if we look at, what's that? That's
Okay, a lot of
so there's a
impromptu charting today, Mike, but I like it. So basically, I had a 3, just almost 4% drop.
yeah, about 4.5%, I think, from top to bottom. Yeah,
Whereas
4.8%.
Bitcoin had a more than 10%. Yeah, Bitcoin had a 19% drop.
Yeah,
Which is quite considerable. I think in the past,
fair market
I would.
in 10 minutes.
Yeah, no, 100%. I think in the past I would expect that. These days, maybe not as much, just because it's become more and more institutionalized. So that's,
Yeah.
it's a 5-time multiplier of the move. Again, depending on what chart you look at.
Sure.
But even still, I think you're right. Back, if we look back, sorry, Mike, back to end of August, we were sitting around 107. So
yeah,
it's, and plus we didn't get a pullback in September, which we were expecting.
indeed. Yeah. Whichever way,
So
Roger says why charts different. It's quite simply assets get their pricing from different sources, essentially. CFDs get their essentially pricing from liquidity providers, which theoretically is based on the underlying market. Futures contracts obviously differ depending on which is the futures exchange and which is the futures contract. And again, Cam sort of outlined there about why differences in Bitcoin prices might be the same. So, yeah,
I think it just might point to a bit of manipulation. That's all I'm thinking, that over a 4,000 point difference is pretty big. 4,000.
It's not 400, is it? It is pretty significant.
Yeah, it's sort of it's almost, if we take it off the highs, take 4,000 off the Bitcoin highs, it's it's 3.5%. It's a big. That's swing trade territory for a dip, isn't it? In normal markets, it's like, okay,
for sure. Rare earths. I've been banging on about this stock on my live updates. One of the ones that you look back and you think, I wish I'd bought a lot of this. So this is Linus, obviously it trades on the ASX. There doesn't appear to be any stop, and it's a weekly chart. So we've gone up from what's that in percentage? They're ridiculous. $8 up to 21 since the beginning of July. Luca hasn't been quite so the big sort of reverse in the ASX hasn't been quite as exciting, but nevertheless is a fairly staggering move up. We've got again, if we look at the beginning of July, that was an earnings gap up, and that's 88%. I'm not very familiar with rare earth stocks in the US. Are you thinking any?
Well, I was just going to ask you, Mike. I was just going to say I've never looked at a rare earth chart at all. So yeah, I mean it's interesting, isn't it? I mean, unbelievable.
It's US rare earth Inc. So Linus are a big player. Linus, because China obviously control 90% of the processed lithium. Sorry, processed
Yeah,
rare earths.
yeah. They
They're
have
about behind with about 8%, I think.
90%. 90% of the rare earths come from China. Yeah.
Yeah, I think they dig 70% out, and then by the time they buy it from other places and process it themselves, it becomes 90%.
Okay.
There was a few US. I don't know how liquid these are, but okay. What's this ticker code? Give me a ticker code. USAR. I should have really got a trading view chart for this, shouldn't I? Really? Okay.
You want me to bring it up, Mike? What's the ticker?
Yeah, bring it up. So ticker code's USAR.
Yeah, so it's that day for impromptu charts.
It is. Which is not a bad thing. So I will just pop it over to you, actually.
Yeah, go for it. All right. Okay, so this is a daily chart, and it's almost opening pre-market. It's almost opening at all-time highs. Looking back to this is crazy. So basically, from the breakout, it's gone up 130% since this. Let's just put a line on there. So there was obviously some kind of resistance there. Yeah, there you go. Resistance there. And then over here, Mike, last year, completely irrelevant. I mean,
I know.
never heard of rare
Mad.
earths. No one had ever heard of it. I mean, trading down at $10. So we've had like a 400% return. Pretty crazy. And something must have happened here in March for this pop up, and then a big so okay, I'm a complete novice to this chart, but why did it completely drop off in April when that was when the tariffs were introduced?
Yes.
Well, I mean, I guess it was the 2nd of April. Okay, so maybe everything's going okay. 2nd of April comes in, and yeah, it goes from $5 to 4x's basically. And then everything's going okay, and I'm just trying to think what happened at the beginning of this month for it to double.
It's the whole sector has just got. I'm wondering if, because obviously rare earths is a little bit of an umbrella term for, and it might. Okay. What I'm going to do for you guys who want to, I've just found an article which has the 9 biggest companies in 2025, top rare earth stocks. I'm guessing these are probably US. Have a look. There's actually a downloadable here as well. There you go. I had a bonus from being on the session. That means you're going to, obviously you're on a mailing list, but just post it in. if I can do this. Investingnews.com is where it's at. I'm going to have a wee look at that myself. Right. There you go. So it's got the 9 top rare earth stocks. It's an interesting one when you see something like this. Do you go for something that's pure, if that's your fundamental idea, or do you go something that's pure with a little bit of a hedge because it does some other stuff as well? Again, that's something that you guys have got to decide for yourselves, I guess. Yeah, maybe we'll do something on rare earths at some stage, just to do some research and have a play amongst all of the other stuff that we have masses of time to do. But yeah, interesting story amongst it all. And that's why I popped up a rare earths chat, because obviously that's been in the news this week. Has been a thing. Right, that's really all we were going to have a chat about today. We've covered quite a lot of ground there. Is there anything you've got? Any questions you've got? Any comments or anything that you'd like to raise? China not wanting to share Earth, perhaps. Well, it's an edge they've got. Undoubtedly, it's some leverage they have over the US. And that's how companies behave. It's nothing unusual about China. That's how countries behave. If they want some advantage in trade or an edge on the market, then they'll play to that. They won't just say, "Oh, well, here you go. Here's our rare earth. Thank you very much. You can have it for nothing." So the China are playing no different a game to any other country on the planet that's got an edge with anything, really. Perhaps the way they do it is slightly different, but generally speaking, that's the way it is. So yeah, perhaps it just keeps that edge there. And Trump's obviously fighting back with the way he knows. Let's slip 100% tariffs on in 5 minutes. But yes, interesting story. But one of the reasons why we might get some info out this week. It might be worth just keeping an eye on what that sector or subsector is doing when news comes out. It doesn't appear to be doing anything but going up across the board at the minute. But thanks for the comment, Chucky. I don't know how that meter's going, but we'll put it as a thing on our dashboard, I think. Roger, thanks very much for your contribution, and to all of you who have asked questions and love comments there. It's been wonderful. So welcome, Sonia. Always good to see you here. Sam, any final thoughts or words of wisdom, or are we words of wisdom and wisdomed out?
Well, there's always wisdom. Look, I think at the moment it's probably a time to be a little bit cautious, but also not so cautious that you don't get into positions, you know. But I think it's for me, I can only say what I'm highly alert on all of the charts, just making sure that you're getting any of the news outs that are coming, looking at where you'd be looking to get into the market, potentially. Normally I don't put orders into the market, but I have orders in the market for perhaps partial fills, just in case I'm asleep or unavailable, as we sort of just are in a I don't want to say an alert zone, but we're at a point where something could happen in a couple of minutes, and like that, what we saw with Bitcoin was, even if you wanted to trade it, you had 5 minutes. That's it. So that means you had 5 minutes to trade it if you've got the money in your account and you're ready to go. And I think that's it. I think it's just tighten everything up. As you said before, Mike, it's if you have been punched in the nose, then take a look at that and look how you can protect yourself against that. And yeah, just be ready and be prepared at the moment for potential entries into the market if we get further drops. And just be aware of the news. Yeah, that's kind of where I'm at, is just kind of brushed up on where I'd be happy to get into the market, even if it drops a little bit lower. And as I say, just sort of ready just in case something happens and I'm not around.
Yes. Yeah, I think that's a good, and particularly, I mean, I think that one thing you raised there about making sure that you have the resources to be able to take action when if and when those opportunities do occur. If you're fully
sorry, Mike, continue.
If you're fully spent up, then you're not there to do it.
No, I think it's huge. I've just seen it over and over and over of really good pricing coming into the market, albeit be it from an investment level or a trading level, and perhaps clients just not like, just I had to transfer the money, and by the time you start transferring money around, could be anything from, I mean, I had a little bit of that situation on the weekend of, I wanted to move some more fiat into USDT, being the weekend, wasn't so easy for me. So yeah, just being aware, and that type of situation would take me a few days to get those funds across. So just being aware and having it in your accounts. Yeah, we've fallen foul to it, and many other people have fallen foul to it. Yeah,
all times in a care account.
Yeah, exactly.
And obviously, despite the slings and arrows of it all, this is where there is good money to be made. In the volatility, in the swings up and down, it's where there's some good opportunities.
Sorry, Mike, was that a question to me, or was that you just
statement? I mean, that's
just a statement.
It's just a sort of, this is when, if you do the right thing and if you are prepared, then it can be quite an interesting time. Anyway, we'll put the Discord link in. We'll put the Telegram link in Discord. Put the Discord link in Telegram. Obviously, we'll do a next session. But what I might try and do is obviously the sort of daily updates that I do. If there's anything I think is interesting, particularly with lots going on this week, I'll be keeping an eye on earnings and that sort of stuff. And obviously, we can, if we come across any articles of interest, more than happy to post it up there. So keep touch base with Discord and Telegram. I know Cam is very active on there in terms of letting people know what's going on. So make sure you're part of both those platforms. And most importantly, trade safe. Thank you very much for being with us today. It's always...
Mike, there's a quick one of Roger's just asking about any ideas on how high silver will go. It's maybe your bag rather than mine. Any thoughts on that?
Have a quick look at. I think you can lob the gold silver ratio out the window at the moment. Generally speaking, if we look at who buys silver versus who buys gold, central banks don't buy as much silver as they do buy gold. But obviously, retail lower end investors don't have the opportunity to perhaps invest in quite as much gold as I would like. So silver becomes an alternative. If we look at, here's a silver chart for you. It doesn't look that much different. Relatively speaking, so how much is silver? I don't. It's about a month since I've had a look at a silver chart, to be absolutely honest. But since beginning of September, silver's up 32%. 33%. But you would imagine right now, it's going to track gold. But whether it tracks it in the same way, shape, or form, it's obviously difficult to tell. But if it's trading at $51, markets like nice round numbers, of course, it might pull back to 50. If gold's going to challenge 5,000, you imagine this will be challenging 60 at least. But at this stage, it's one way, and every retracement is just seen as an opportunity to get into more. Slight disparity today in what's happened, but that's maybe profit taking. There's ETFs which hold your silver in the same way as ETFs that hold gold, although GLD I think is the 4th or the 5th largest holder of gold these days. The silver, what's the silver ETF? Oh. SLV, they I think hold physical silver rather than silver futures. So again, perhaps look at the flows in and out of some of the silver and gold orientated ETFs as a guide. But at this stage, if you're trading on MT5, then the opportunity to trade really small volumes just to sort of breathe with it a little bit is maybe not a bad thing. But if you're non-leveraged and if you're buying the physical, then it's probably a slightly different tactic. But yeah, $60 wouldn't surprise me if I have to plant the flag somewhere. Is that what you needed? Still wanted? Yes, they are hiding. They are recorded. We'll post them on. Can't post it on Telegram. I'll make sure it's in Discord channel as well.
Yeah, we'll post it out. My only sort of addition to what you were saying, Mike, on silver is I had a very good friend that's a prepper, and all I know is that he had to make a lot bigger hole than he expected in his garden when he bought silver. So, if you're buying silver and putting it in the back garden, just dig a bigger hole. Yeah, it's a lot more.
Sure. Yeah, absolutely. Great stuff. Well, we'll love and leave you. Cam, it's always a pleasure and a privilege, mate, to share a bit of time, share the trading back with you and put the world to rights. Thank you very much indeed to you and to everybody who's popped in. We hope you have a good rest of Tuesday. We'll see you later. Take care.
Cheers.